So thank you so much, team, and thank you so much, colleagues. Let me start by saying good morning, good afternoon, good evening, depending on which part of the world you are in. Colleagues, distinguished speakers, the panelists, and all participants that have joined to this meeting. Please accept my apologies for us starting 2 minutes late. We have a very tight program, so we'll try as much as possible to catch up on the last 2 minutes and be very strict with time. It is my pleasure and honor to welcome you all to this regional synthesis webinar on agricultural trade disruptions in sub-Saharan Africa. My name is Brian Mulenga. I'm the Executive Director of AFCFTA, one of the centers of ANAPRI. And I'll be a facilitator for this session together with Dr. Lillian Kirimi, who is going to lead the panel discussion session. So, colleagues, I think most of us have noticed that in the past 18 months or about 2 years, there's been a policy whiplash as regards to agriculture trade in sub-Saharan Africa, where we've seen a lot of countries imposing export and import restrictions, others opening and closing the borders. And all this has been driven by the food security pressures, the price volatilities, and market uncertainty. So a lot of countries responded, by, of course, prioritizing to safeguard domestic food security and domestic markets. But what this has done over time is that it has undermined, the development of regional trade integration, which most of our countries, have ratified some of these regional economic communities, as well as in the framework of the AfCFTA. And so by undermining all these commitments that our countries have made and the efforts that are being made, to strengthen the trade integration and economic integration in the region, what we are seeing is now, cracks beginning to form within regional trade. We've seen significant spillover effects, including disruption to cross-border value chains, increased transaction cost, uncertainty, for traders and processors, and ultimately eroding the confidence in regional trade commitments and efforts across the continent. So this session for today, we'll try to draw lessons and evidence that has been generated through country-level dialogues that were conducted in ANAPRI centers in 6 countries. These are Ghana, Malawi, Kenya, Uganda, Tanzania, and Zambia. The purpose mainly for this session, is to reflect on the drivers and consequences of the recent agricultural trade disruption and to identify practical mechanisms and pathways, for creating an environment where we have more predictable, transparent, and evidence-backed agricultural trade policies. So our session today, let me just run you quickly on how our session will flow. So I'm giving the welcoming remarks, and I also do the framing and also just give an overview of the objectives. Then we'll have 2 distinguished speakers. These are institutional leaders and people with vast, extensive expertise and experience in the agricultural policy space to give our opening remarks. Then we'll have a keynote presentation by Dr. Tim Njagi. And then we are going to move on to a country and regional perspective session, which is going to be a panel session. We'll have experts from academia, experts from public sector, experts from private sector, and experts from regional research centers. After that, we're going to have a plenary session, an open Q&A as well as discussion, and then we'll have a summary as well as next steps, and then we'll close. So we have a very tight program, so please hang tight so that we finish our program in time. Having given that background, let me just quickly give an overview of the session's objectives. So we have two objectives. The first is to present evidence on the scale, drivers, and consequences of agriculture trade disruptions that we've seen. And this will be drawing lessons and evidence from the 6 countries which I mentioned where trade dialogues were conducted. Secondly, the second objective is to facilitate policy dialogue on practical, regional cooperation mechanisms, that will enhance and also support more predictable, transparent, and evidence-backed agricultural trade decisions, including rapid analytics, early warning systems, as well as structured consultation and coordinated responses under the AfCFTA and the REX frameworks that most of our countries have ratified to. So with those two objectives, what are our expected outcomes? So we have two key expected outcomes. The first one is we hope at the end of this session, we'll all have an improved shared understanding on the effects of agri-trade disruptions on supply chain, food systems, and regional trade integration commitments within the continent. Secondly, we hope that that will feed now into us brainstorming, to identify priority actions, pragmatic actions that are supposed to be implemented and undertaken to strengthen regional coordination and ensure that the AfCFTA agenda is realized in time and as was planned. So with this background and overview, let me now move to the next. We move to the next session of the meeting, and to help us frame the meeting and set the tone, really, we have two distinguished speakers, institutional leaders, experts in agricultural policy, as I mentioned earlier on. So first speaker to give opening remarks is going to be Dr. Anthony Chapoto, who is the Executive Director of the ANAPRI Secretariat. Just a brief background on Dr. Chapoto, who is my former boss, my brother, my colleague, my mentor, and everything. Dr. Chapoto is an agriculture and development economist with extensive experience across sub-Saharan Africa. His work spans agriculture productivity, technology adoption, commercialization, policy reforms, among others, including climate-smart agriculture growth. As ED of ANAPRI, Dr. Chapoto leads collaborative work, capacity building, and policy engagement to promote evidence-based decision-making. His leadership strengthens agriculture innovation systems, smallholder market linkages, and knowledge exchange towards Africa's sustainable economic transformation. Let me now take the pleasure and honor to invite the ED of ANAPRI, Dr. Anthony Chapoto, to give us his opening remarks. Dr. Chapoto, the floor is all yours, sir. Thank you. Over to you.
No, thank you. Thank you so much, Brian, for these warm greetings. I am really honored to be here, and good afternoon, colleagues and friends. We are joining us from different parts of the continent and beyond. It is a pleasure to welcome you on behalf of ANAPRI Secretariat to this important discussion on agricultural trade disruptions in the sub-Saharan Africa. Colleagues, what we have seen in recent years is a growing an increase disruptions in agricultural trade through export bans, licensing requirements, and sudden changes in the import regulations. While these measures are often introduced to address food security concerns or stabilize prices, they can also create unintended consequences. They disrupt supply chains, increase transaction costs, reduce incentives for investment, and also affect our farmers, traders, processors, and consumers alike. For ANAPRI, these disruptions are a major policy concern because they sit at the intersection of food security, livelihood, market stability, and regional integration. Moments of food and market stress require governments to act very quickly, but also they need to act very carefully. Policy decisions made under pressure can either help stabilize markets or worsen the situation. This is why evidence-based policy making is so important. Before restrictions are introduced, we must ask key questions. Some of the questions include the following. What is driving price increases? What are the alternative measures that can protect vulnerable populations without disrupting trade? And also, could targeted safety nets, strategic food reserves, or better market information systems achieve the same objectives more effectively? So as at ANAPRI, we believe that urgent decisions must still be guided by timely and credible evidence. We also recognize that no single institution can generate all the evidence needed to respond to these challenges. Partnerships are therefore very important and very essential. Working with regional organizations, universities, private actors, networks such as AgriBridge, and of course our centers, allows us to strengthen data systems, improve trade and market analysis, and translate research into practical policy options. I'm glad also that we have partnered with AGRA to try to discuss these pertinent issues and find solutions for us to achieve our objectives of Africa trading with its colleagues. These collaborations help ensure that policy responses are informed by a wide range of expertise and current country experiences. Another important part of ANAPRI's approach is policy dialogue, both at the national level and continental level. Good policies are strengthened when governments engage with farmers, traders, processors, border agencies, and as well as consumers. These conversations help identify the real challenges behind the numbers, whether delays at the borders, unclear standards, high transaction costs, or barriers preventing smallholder farmers from accessing markets. They also help policymakers better understand who is affected by different policies and also the different choices that we make as governments, and how to protect vulnerable groups while keeping markets functional. Ultimately, the repeated nature of these disruptions shows the need for stronger regional coordination and more predictable agricultural trade policies. Frameworks such as the AfCFTA and the regional economic communities provide an important foundation, but we also need practical tools such as early warning systems, timely communication of trade measures, and clear guidelines for emergency actions. Predictability is also very critical for encouraging investment in production, storage, processing, and cross-border trade. As we engage in today's discussion, I would like to encourage all of us to remember one important point. Africa does not have to choose between food security and open trade. With better evidence, stronger coordination, and more thoughtful policy making, trade can become part of the solution by improving food access, reducing price volatility, and creating reliable markets for farmers and agribusinesses. I look forward to the insights and recommendations that will emerge from today's webinar. And Dr. Brian, thank you so much. I thank you.
Thank you so much, Dr. Chapoto. Enormous thanks. You've really articulated, I think, the issues at hand very well. You've also, I think, given us a sneak peek into how governments tend to form decisions when they're under pressure, and also what that does, not just to the regional markets, but also within the domestic market. And I think also your emphasis on the need for coordination and collaboration across the different stakeholders is well noted. Thank you so much. Without much ado, let me move on to invite our second distinguished speaker. And this is no other than Dr. Nega Wubene, who is the head of markets and trade at AGRA, who will help us to share, reflections from AGRA's perspectives on market development, trade, and agricultural transformation. Just give me 30 seconds, to give a short bio of Dr. Wubene. So as I mentioned earlier on, he's the head of markets and trade. He brings extensive experience from previous leadership roles within AGRA, including serving as country manager for Ethiopia. His expertise spans leadership, research, market, policy, program management. His work supports initiatives that advance market development and trade as drivers of agricultural transformation in Africa. I think with this profile, we couldn't have had a better distinguished speaker to corroborate or support or add to what Dr. Chapoto has highlighted so far. So, Dr. Wubene, I have the pleasure of inviting you, sir, to give your opening remarks. Over to you.
Thank you, Brian, and thank you, Anthony. I'm happy to be here. Welcome, everyone, to this really important session to discuss trade disruption issues. Most of the issues have been really quite addressed by the eloquent opening remarks by Anthony. But I want also to emphasize that the trade issue has never been more important now in Africa than before. As you can see, we are seeing different shocks and disruptions, either COVID, Russia, Ukraine, and now Middle East crisis has shown the vulnerability of African markets. We have extended supply chains somewhere far from our continent. Disruption happens, and then our food security is threatened. As you can recently see, fertilizer and fuel are disrupting African agriculture and trade. And as a continent, also, we are importing massive amount of food from the rest of the world. And we are trading among ourselves very little, depending which number you're looking at. It's about around 15% of the trade in Africa happens, within the member states. Whereas in continents like Europe, it's over 70%. Now, this is an opportunity for Africa, to integrate, to trade among ourselves and create job opportunities and economic growth. Unfortunately, as Anthony pointed out, we see repeated disruptions of trade, maybe mostly knee-jerk reactions to supply disruptions within countries. So that's Innocent, can you mute, please? Thank you.
Dr. Pangapanga, I think your mic is on. If you could mute. Thank you.
Yeah. So we've been seeing repeated disruptions of trade. Recently, we saw between Malawi and Tanzania, and also as a result of the drought we have experienced in Southern African region, we've been trying to facilitate trade of staple commodities from Eastern Africa into Southern Africa region, but we face so many challenges. And we saw also recently export ban from Ghana in the West Africa region, and then the Sahelian countries also responding by. So this is an ongoing disruption we're seeing that's articulated earlier, impacting smallholder farmers, consumers, traders, and agro-processors. So this is a very timely, webinar to discuss what are the issues, what are the ways to address these trade disruptions, so that we have continuity of trade. As AGRA, we see regional trade as an extension of the domestic market, and we have designed our programs, particularly the value chain development programs, the demand-driven, which basically the regional, the continental, international, and domestic trade, providing the demand pool to transform our value chains. So to the extent trade is disrupted, it's also impacting, upstream level activities and other value chain activities. We've been trying to promote, the mutual recognition agreements between bilaterally in the Eastern and Southern African region. And also, as Anthony pointed out, some of these disruptive decisions are made in the absence of credible data and evidence. So to overcome that, we are working with COMESA to create a regional food balance sheet that's updated quite frequently, looking at future production forecasts, domestic consumption, export, import, and also reserve balances, so that policymakers don't make decision to put export and import ban without having this information. We are also trying to support smallholder, cross-border traders, which have been affected by various restrictions. Anthony mentioned phytosanitary standards, related issues, disruption at the border, corruption, police checkpoints, you name it, so many of them. As a result of these high costs and cumbersome processes, many of our smallholder traders remain informal, and then they lose opportunity to grow their businesses. So we've been working with Cross-Border Traders Association in Eastern Africa as well as in West Africa, so that they can report, non-tariff trade barriers to a digital platform so that they can get resolved quickly. So I would like to say that this is an important, really, webinar addressing important issues in the continent. We are happy to partner with ANAPRI on so many fronts, in the policy analysis or as members of Food Coalition for Food Trade in Africa and many other activities. So I'd like to stop here and wish us a very important deliberation, and I hope we can come up with some concrete actions to drive food trade in the continent. Thank you very much. Over to you, Brian.
Thank you so much, Dr. Ubene, for your very important remarks. And as I'd mentioned earlier on, indeed, they do corroborate and dovetail as well with what Dr. Chapoto had outlined. I think you really highlight, the practical issues on the ground, based on AGRA's experience and what AGRA has been, trying to implement to try and unlock, some of these log jams that are restricting regional trade. And I think you also highlighted the regional food balance sheet, which I'm happy to mention that indeed we have seen it getting traction, and we hope it to be sustained and maintained so that it forms part of the early warning systems for our policymakers. Thank you so much once again. Without much ado, let's move to the next session where we have the keynote presentation. I'll now invite Dr. Tim Njagi from ANAPRI's Modeling Services Center to give us a keynote presentation, which is titled Agricultural Trade Disruptions in Sub-Saharan Africa, Rapid Synthesis and Feedback from Country Dialogue. So this presentation was going to synthesize the evidence from 6 countries that I'd mentioned earlier on, where we had country dialogues, and also highlight the key implications for food systems, markets, and regional integration. Dr. Tim, you have 15 minutes to make your presentation. Thank you so much, and over to you.
Thank you, Brian. At the moment, I'm trying to move the screen. Just Can you see my screen?
I can confirm.
Yes,
it
we can
came.
see.
And then, okay, yes, I can confirm that I can see the screen, Tim. You can go ahead.
Thank you. Thank you so much, Brian. So I have the opportunity to present to you work that was done by several colleagues across ANAPRI in the AGRA. And I'm going to present to you some key lessons we've learned from the 6 countries. I think these have already been mentioned before. So just to reiterate that from the work that we've been doing in ANAPRI, one of the key things that has continued to emerge as a key theme are trade restrictions. So as we think of developing and growing our value chain, the next question has always been, where is this market? This market can be accessed, the opportunity to access market has been mainly on external markets, especially when you're doing value addition or improving the quality of our production. However, I think as Anthony mentioned, and I think also Dr. Nega has emphasized this, we've seen a lot of trade restrictions in the past 2 years. I think he mentioned the case of Malawi with the export bans, I think, but in all the 6 cases, we see different cases of restrictions. In Tanzania, for example, it comes in forms of licensing restrictions. In Kenya, it comes in form of FPS restrictions. In Uganda, we've also seen the issue about restricting unprocessed produce. In Ghana, we've seen a different scenario whereby, besides the bans, we've also seen security issues that are stifling access to this market. And then, of course, in Zambia, similar to what we've seen in Malawi, we've seen bans on staple commodities. So the challenge is when you look at cumulatively how much this costs Africa as a continent, the estimate right now is about $9 billion. To contextualize it, in the case of West Africa, I think it accounts to 2% of GDP that is lost as a result of agricultural trade restrictions. So confidence in agricultural trade tends to be high when it's predictable and with reasonable consumption costs. So our motivation for this work builds on other work that is done. For example, uh, early this year we engaged with another policy, trade policy policy brief, where we worked with the AgriBridge network. And among the key highlights from that work was that as we think about accessing global markets, and this, for example, we think of the markets in Europe, the EU, or the US, there's a big opportunity for implementing the AfCFTA, which is now the continental as well as the regional trade agreements, so that it kind of creates a pool for the markets for the produce that you're producing in the continent, as well as creating opportunity for employment and job for women and youth. So we did this in 6 countries, and I think one of the things that we are learning here is that markets integrate, but our policies are really fragmented. Across the 6 countries, we've seen these examples of ad hoc import or export restrictions. We have a lot of non-tariff barriers and technical barriers to trade. We have weak market intelligence, and Dr. Nega mentioned about the food balance sheet. So the common practice of what we found, especially in the 6 countries, is that this is rarely consulted when countries are coming up with policy decisions, for example, on bans. And of course, the other key structural challenges include logistics. We have high transport costs along our trade corridors. And of course, we have weak standard systems that also affect financing of the sector. So our trade confidence is really undermined by the unpredictable restrictions and high transaction costs. So the key thing that we've learned in terms of key messages, I'm gonna show you 7 key messages that we learned, is that more often than not, we look at what is the main driver when we are imposing these restrictions and bans. Usually it tends to be food security. Local domestic needs, especially food security needs, is often used to justify trade restrictions and abrupt. But then the key thing is that it ends up backfiring because one, when we have trade restrictions, and I've given an example where if you look at the region, you'll see that the time where, for example, surplus countries like Malawi and Zambia have export bans in place, you have huge deficits in countries like Kenya, and then they end up resorting from importing from the global market. So the key thing is that Kenya imports a commodity from the global market. Because of the conveyance cost and other restrictions, you'll find that tariffs, that the product ends up most likely on a higher price than you would have gotten when you import from the region. So the consumer ends up paying uh, more for the same produce. In the countries where the ban has been imposed, because now it creates a situation of oversupply, then you depress farm gate prices and then you deny consumers or producers, you deny producers the benefit of increased prices and raising their gross margin. This also interferes with the motivation for investment, especially as we've been calling for a lot of increasing private sector investments in agriculture. When our consumers are facing high prices, of course, you'd expect that they will start to rationalize and in some cases substitute. And of course, as you can expect, every time a country imposes a restriction, it is usually followed by retaliation from other countries. And because of when you look at them together, whether they are through bans or licensing requirements, because we impose trade restrictions and we make the compliance cost high, then it's pushing agricultural trade more towards informality. And this is not transformative, especially when we think of where we are as a continent and where we're going. So the key lesson here is that when we think of deficits or surpluses, they will transcend national borders. And when we think of the national only responses, we end up creating a lot of volatility within the region. The next message is that right now, we've moved, tariffs are not longer a problem. The key problem today, especially in terms of agricultural trade restrictions, are non-tariff barriers and technical barriers to trade. Um, These have continued to persist, and we've seen a lot of efforts. For example, in the EAC, there is a committee that monitors NTB and its resolution, and they have been trying to cut the time it takes to resolve most of these NTBs, but they continue to persist. I think the current commitment, for example, in the EAC region, is that they should eliminate all existing NTBs by June. But then we are sure that in the next year, you will see additional NTBs. So the key thing that we are recommending here is that, like this has been set in the EAC region, when you have resolution timelines, you have to create a target where you want to eliminate NTBs. You need to continue to monitor and publish this in a public dashboard. And when people are doing repeat offenders, and we've seen on the 6 countries where an NTB is resolved this year, and then after several months, it is reinstated and it comes probably treated in a different way. So we have to keep escalating, especially, and creating accountability for the people who are repeating these mistakes. Then I want to emphasize what Dr. Nega mentioned here. When we think of market intelligence, it's essentially a public good. So although within COMESA, for example, we have the regional food balance sheet, it is not making its way to the decision-making platform. So when governments are imposing bans, they don't consult for probably how they can benefit from the regional market by looking at areas where there's surplus and areas where you have deficit. So we need also to strengthen data, especially on prices and flows along different corridors. And the key thing that we find here is that our market is lacking, we have an intelligent path in the sense that we have some data sets that we can use to improve our policy, but there is poor coordination, and we end up making decisions that erode trust, leads to a lot of speculation, and many governments act defensively to prioritizing domestic needs. And then, of course, as we explained, this ends up leading to regional volatility. The other key lesson is that when we're thinking about this as a common market, we need to think beyond the custom reforms to look at the trade corridor reforms. Essentially because we have several regional bodies. We have SADC in the south, we have COMESA, we have EAC, we have ECOWAS, now we have AfCFTA. But essentially what you're trying to do is to facilitate movement of goods and services across the continent. So we should be thinking, in our case for agricultural goods, how do we strengthen our trade corridors uh, by ensuring that we have the requisite infrastructure, which is not just the transport, but for example, associated infrastructure such as grading. For horticulture, you think of cold chain. For dairy, you think of SPS as well as cold chain as well. So we need to think of how do we ensure that as we move beyond the customs, where we're saying that we need to eliminate levies or border inefficiencies, how do we also improve our trade corridors so that they become more facilitative of agricultural trade? The next lesson we've learned here is that standards can enable trade, but mainly we've seen that every time we mention standards, they are being seen more as section interventions. Partly it's because of, again, the awareness, sometimes it's because of non-recognition of certificates, so that a trader is forced to acquire two certificates from the exporting country and the importing country, and this just raises the cost, which mainly tends to be transferred either to the consumer or the producer gets panicked because now he has to pay to access a certain market. So we look at the mutual recognition of certificates so that if we are in a common market, if you test it in one area, you don't have to repeat the test in another country, and that test is accepted. We need to expand our accreditation laboratories. We need to make sure that our phytosanitary systems are interoperable so that if you can actually track even from one licensing institution in another country, and you can actually exchange these certificates. And then we need also to ensure that we can conduct risk-based inspection, especially because the idea is not to relax trade so that we have lower standards, but to ensure that we are helping our producers and traders conform to these rules. Where we are right now, I think one of the key things that is happening in the global market is the issue about traceability, and especially as we think about sustainability, space safety, and compliance towards sustainable production. So we need to make sure that we think forward and make sure that we can support systems that allow us to be able to do that based on the risk that we're facing. Then the next set of questions, set of lessons, one is on finance. Our finance is constrained mainly because the major risk, especially to support agricultural trading, it tends to be policy induced. And as a result, we see a lot of informality where goods, even when you look at the trade data, you find that different countries are reporting differently because of the different incentives this is creating for traders and other value chain actors. And then, as you can imagine, this has a heavy penalty, especially for women and youth, because they are heavily represented in food trade. And we cannot scale finance without making it easier for people to trade formally, because then it creates the records that financiers want to see. It help them to be able to assess risk better and lower the cost of risk, so that they can charge finance based on a real risk, because informality tends to be uh, full of a lot of information asymmetry. So we recommend that, one of the ways we can try to do this is, again, like we mentioned about the infrastructure, we have this corridor that we are proposing that we need to make sure that we have well developed storage infrastructure. This can be upgraded to bonded warehouses where you can issue receipts, so that people can actually use them to access financing. And then we can also link this, make sure that if we have this system established in different countries, they can actually be exchanged regionally, so that you're not limited to just accessing credit within your country. You can also, if you're trading and you're selling goods from Zambia, for example, to DRC, if you have similar systems, then you could also be able to get credit on the DRC side, and you can actually show what you're trading on the other end. And then we need to expand trade regimes to make sure that we have transparent fees, we have desks where people can get more information, and if there's anything that is being imposed, it's well publicized so that people are not caught unawares when they arrive at the border. So the challenge that we see, which is mainly a call to action, especially as we think about more of implementation of FCTA as well as the regional commitments, is that we need a more transparent rule-based restriction, which comes with advanced notification. We need to ensure that we are utilizing the data that we're generating. I think Dr. Nega mentioned that the food balance sheet, for example, under COMESA is regularly updated. So how do we scale this to the policymakers so that they can actually integrate it in their decision making? We need enforceable mechanisms to eliminate NTBs. So it means that if you are going to put up a barrier, it's time bound, it's well documented what you're doing and the reason why you're doing it. And there's an escalation mechanism or a dispute resolution mechanism in case it concerns the timelines, or if in case it's being something that is being repeated so that it's no longer a measure for protecting trade, but it becomes essentially a barrier. We need to ensure that we have interoperable digital trade systems. I think we have some pilots that are being done under COMESA, like the one border stop, one stop border post intervention across different countries. We need to push for countries to recognize the SPS standards, especially as think about traceability. More so, we need to enhance our investments along our trade corridors and make sure that we're able to finance so that we pull towards structured markets as opposed to right now where we're doing more of informal trade. And more so, we need to institutionalize these public-private dialogues so that we can have this discussion with our value chain actors. And essentially, they can tell us the effects of our policies, and the policy makers can respond adequately. So with that, I think I want to thank you very much for listening to me. Back to you, Brian.
Thank you very much, Tim, for that very comprehensive but well-timed presentation. I think you've highlighted some very key issues which also dovetail well with what our distinguished speakers articulated and outlined in their opening remarks. So thank you so much, Tim. I don't think I need to waste us time to try and summarize what you presented. It was very clear and to the point. You've touched on very key issues. So I think at this point we can move into our first panel discussion, which will try to draw out country level experiences and perspectives from government, academia, research institutions, as well as private sector actors. So at this point, let me yield to Dr. Lilian Kirimi to lead us into our first panel discussions. Dr. Kirimi, over to you. Thank you.
Thank you very much, Dr. Mlenga and Dr. Njagi. Good morning, good afternoon, and good evening, everyone. So now we transition to the panel discussion on country and regional perspectives on agricultural trade disruptions. My name is Lilian Kirimi from Tegemeo Institute, Egerton University, a member of ANAPRI. I'll moderate this session. So we'll have our panel in two parts. Part one will focus on country perspectives, while the second part will give us reflections on regional aspects. I have a big list of panelists. All of them have lots of experience, and I can't do justice in introducing them adequately here, but allowing me to say one or two things about them. In the order I have them here, we have Yota Mukandawire, who is the Executive Secretary of the Grain Traders Association of Zambia. He's an agribusiness specialist with 18 years of experience in horticulture and grain value chains. Next is Dr. Innocent Pangapanga, who is a director for the Center for Agricultural Research and Development, CAD, at the Lilongwe University of Agriculture and Natural Resources. He's a seasoned researcher, and before research, he was working in the government, Ministry of Finance and Economic Affairs. Next, we have Dr. Abba Esther. She's an agri-food systems and social inclusion expert. Her work advances understanding of how agri-food systems and livelihoods can drive inclusive economic transformation. Then we have Kelvin Luyombia. He is an agricultural economist, currently working as a research associate at the Agricultural Policy Research Center at Makerere University in Uganda, with a focus on market analysis, trade policy, and agricultural innovation. He's followed by Lucas Mwago, who is a trade specialist or an expert specializing in trade analysis and consumer protection with lots of experience. He's currently the acting director or the acting chief executive officer of the Kenya Consumer Protection Advisory Committee. Before that, he was the head of Trade Policy Directorate in the Ministry of Investments, Trade and Industry in Kenya. Then we have Janet Maleo. She's a seasoned international trade analyst and a researcher with extensive expertise in export analysis, market research, trade negotiations, trade data analytics, and she has also worked with the government of Tanzania. Last but not least, we have John Chambamakasa. He's an agribusiness and policy advisor for the Alliance for Commodity Trade in Eastern and Southern Africa under the Common Market for Eastern and Southern Africa Secretariat. Many words, we are talking about ACTESA and COMESA. He has over 10 years of experience in agricultural development across COMESA, SADC, and EAC member states. So that's the panel we have. We'll go right into the discussions. I will pose a question to the panelists, and each one of them will have like 5 minutes to respond to the question, and then later we can see how to tie everything together. So I will start with Mr. Mwago. And the question to you is, from a government and consumer protection perspective, what do you see as the most pressing regulatory or structural challenges that are currently affecting agricultural trade? Over to you. Please put on your camera if you can as you respond.
Thank you, Dr. Lillian. Good afternoon, fellow panelists and members who are in the webinar. I thank you for giving me the opportunity to participate in this. The question you have posed to me is that what do I see as the most pressing challenges? And without much ado, allow me to focus on a few areas which to me I think is the most pressing areas in Kenya. We start with the regulatory uncertainty affecting our various systems. In Kenya, we have several institutions that are dealing with the trade in agriculture. We move from AFA, we can come to KEFIs, and a number of other directorates that are dealing with the trade in agricultural commodities. And therefore, as a result of those number and the increasing number of regulatory agencies, we have had a number of frequent changes emanating from those agencies. And this has affected the export trade in a number of ways, including application of various standards that are not talking to each other or not consistent. From each of the organization is looking at their areas of mandate without much synchrony, without much harmony. So those multiple regulation agencies have various overlapping mandates, which often end up in consistent directives that are very costly to the traders and have increased compliance costs. Exporters, on the other hand, face unpredictability in meeting foreign market requirements due to what we heard Dr. Chapoto was talking about, the issue of phytosanitary, the issue of quality standards, and leading border rejections of our product, therefore causing a lot of loss to the market, to the economy. There are other issues to do with the licenses, issues to do with the permits and the standards, and the issues to do with the border procedures, which have also contributed a lot to reduction of the efficiency in the trade, in the agricultural trade. So here we talk about lengthy licensing procedures. We talk about mandatory inspections, issues of conformity standards that are required and by various agencies, and this has causes a lot of delays and increases the cost. We are talking about issues of non-tariff barriers, and I think Dr.
I'm not sure if it's just me or I lost Dr. Mwago.
Yes, we can hear Lucas.
Okay.
Looks like he has a challenge. Maybe we give him 1 minute. If it's not back, then we can move on to the next panelist.
I think he has dropped off, Linda. Maybe
He's dropped off. Okay.
Back.
Sorry about that. So as we can move on to.
I am back. Am I audible now?
Yes, you are. Please continue.
Yes. Thank you so much. I hope my 5 minutes are not. Sorry for that interruption. So we are talking about the issue of NTBs. In the past, there has been a lot of focus on issues to do with the roadblocks, issues to do with licensing costs and the bribes. But I think the government has tried more to focus on the issue of procedures. And border procedures has been a key focus in this government, where we have the government has undertaken a lot of reform, including establishing an NTB committee, as well as establishing a mechanism of reporting. Nowadays, reporters can be able to report instant, real-time information through SMSs, and therefore there has been a lot of efforts to be able to deal with the issues of NTB. Lastly, allow me to talk about the synergy between consumer protection, food safety, and the trade facilitation. Whereas Kenya must strengthen food safety controls and ensure regulations do not unnecessarily restrict the trade performance. There should be a balance between that by ensuring that we are able to take care of the risks associated with inspections and the harmonization of standards that can help or that can prevent the consumer from enjoying the consumer rights. And it is because of this that the government now has empowered the agency that I represent here, called the Consumer Protection, to be able to coordinate and also be part of the trade facilitation ecosystem in the country by ensuring that the voices of the consumer is heard and protected as we ensure the policies and the changes and the reforms that we are putting in place are reflective of what the consumer wants to hear and what the consumers' rights ensure that consumers' rights are protected. So, Lillian, I wish to leave it there because of time, and probably continue discussing if you give me another opportunity ahead. Thank you.
Perfect. Thank you very much, Lucas. Now we'll turn to Dr. Abba. From your perspective, how have disruptions in regional and global markets, including markets for fertilizer, edible oils and grains and other markets, how have those disruptions transmitted into African agricultural markets?
Thank you very much, Dr. Kirimi, for the opportunity to contribute to such a timely discussion on issues affecting various countries across the continent, especially related to trade. Good afternoon to the earlier speakers, to my fellow panelists, and then to distinguished participants. It's really a pleasure to contribute to this conversation on agricultural trade disruptions and the implications for the African food systems. One thing we should note is that many of the countries on the continent rely heavily on imported things like fertilizers, edible oils, wheat, and other grains. So shocks in international supply chains definitely affect the domestic market. When you take the global and regional market disruptions, they are mostly transmitted through 4 main channels to the African market. So you can think of the import dependence, you can think of the exchange rate depreciation, you can also think of rising transportation and energy costs, as well as the supply chain disruptions itself. And literature shows that more than 2/3 of the countries here on the continent, of course, when it comes to fertilizer, we import over 80%, especially when it comes to nitrogen and potash fertilizers, right? Also, Africa is one of the most import vulnerable regions for staple foods, such as wheat and edible oils. And this vulnerability definitely became evident when you take the COVID period, which is between 2019, 2020, then during the recovery period between 2021 to 2023, and then also the Russia-Ukraine war when it happened. During this period, sharp increases in fertilizer, wheat, and other edible oil in their prices, of course, translated into higher food inflation and production costs across many of the African economies. So, for example, I'll speak about some examples in some countries. When you take Nigeria, during the COVID recovery period, food inflation rose way beyond 30% in some periods. And we can understand the implication of this, driven by foreign exchange shortages, rising transportation costs, and also insecurity in food producing regions, and as well as the higher global grain prices. Although we know Nigeria produces fertilizer domestically through the Dangote fertilizer plant, however, the global natural gas price increases still raise the production of fertilizer and distribution costs. Also, wheat import dependence further exposed the regular consumer to rising global grain prices after the disruption of the Black Sea exports in 2022. And I think we remember some of these incidences. And in Zambia, also during the recovery period between 2022-2023 farming season, fertilizer prices increased, I think, by more than 100% in some cases, or peaking beyond that, placing major pressure on the farmer input support program. And since fertilizer subsidies are central to maize production, rising global fertilizer costs increase fiscal burdens on the government, while also raising concerns about food affordability and national supply stability. And then when you take the example of Tanzania, also after the COVID, during the recovery period, which is 2021-2023, edible oil prices, also the shocks in edible oil price were strongly felt because of dependence on imported palm oil and sunflower oil market disruptions, rising fuel and shipping costs after the pandemic and during the Ukraine war also increased transportation costs for agricultural goods, affecting both the rural and urban consumers. And then coming to Kenya, during the same period of 2022-2023, we can testify about the maize flour prices, which also rose by more than 30% in some cases, as drought conditions combined with rising fertilizer prices and global grain supply disruptions occurred. And at the same time, the depreciation of the Kenyan shilling increased import bills for fuel, fertilizers, and food commodities, further intensifying inflationary pressures. And then finally, coming to my country, Ghana, between that same period of 2022-2023, food inflation also went beyond 50% at certain points, while fertilizer prices reportedly more than doubled in 2022. The sharp depreciation of our currency, which is the cedi, significantly increased the cost of imported fertilizers, wheat, poultry feed, and cooking oil, raising production costs for the common Ghanaian, about which quite a number of them are farmers, and weakening household purchasing power. So when you look at these examples across the various countries, we can see that exchange rate depreciation amplified the impact of global shocks by increasing import costs, thereby worsening food inflation and undermining household food security. And then we also know that policy responses, therefore, matter greatly. So how the government postures itself matters when it comes to some of these challenges encountered. Some governments introduced fertilizer subsidies, reduced import duties, or expanded strategic grain reserves to cushion consumers and the farmers. But then also we know delayed interventions, export restrictions, and inconsistent policy coordination in some cases amplify the market uncertainty and price volatility. So these are some of the examples I'll give in trying to address the issue of how disruptions in regional and global markets translate into the African market when it comes to some of the key things the countries depend on to feed people and then also to feed the industries. Thank you very much.
Thank you very much, Esther. Well, that was a good brief about what has been happening in the different countries. And as you will note, I'll not try to summarize what the panelists are saying. So please keep note. If you have a question, you'll be able to ask in the next session. Now we move on to Dr. Panga. Your question is following. Based on Malawi's experience and wider regional lessons, what practical steps or concrete policy actions should be implemented to ensure effective agricultural trade and market access? Over to you, Innocent.
Thank you very much, Dr. Lillian. I would start from an understanding that when we did the study and we looked at the neighboring countries, including those that are far, we see that the trade restrictions that have been happening in Africa, they have been having very detrimental effects, even to the households. And in general, we see that most of the countries have been pushing for these restrictions due to food security kind of objectives. And what we see, of course, is to most of these African states or African countries, they cannot live without those restrictions because of the varied objective that they have around food security or meeting the domestic demand. But there are policy and structural challenges that we also noted as they implement the restrictions. And I would want to isolate the practical steps or actions based on the policy and structural challenges that we saw. What we found is most of these African states or countries do not have a framework so that could be able to determine or to predict the next steps that they would have. Then secondly, we also see that most of these countries, including Malawi, lacks the use of data in them making the decisions that they tend to make, in courts justifying that they are protecting the domestic market or the domestic consumer. We also see that there is weak enforcement of regional kind of trade commitments. Here we are talking about including SADC, COMESA, and also the wider African Free Continental Trade Area. And because of that, we see a number of things that are also happening, including repercussions where other countries are able to do back what, for example, Malawi or other states would be able to do. We also see a lot of complaints from the traders that are in that country, suggesting limited engagement of the trade, the private sectors that are investing their resources in this in the market, whether they are exporting or maybe they are keeping some for their own market. Now, combining all these, we also see that the governments, when they would want to have these restrictions, they don't even provide warnings or early information that would allow participants or traders be aware of the action that government would be able to take. Now, what should government be able to do? So practically, we are suggesting that government should be able to develop a system or a rules-based approach where they become predictable of their next steps. The other parties, we are suggesting or we propose that government should be able to engage the private sector, because these private sectors, they have invested their resources in the market that they wanted, for example, to export either of the value chain that is being exported. In the case of Malawi, we'll talk about soybeans, groundnuts, including maize. So engaging them would be a better way for government to assess the implication that would come due to the policy action of restricting, for example, of imposing the export ban. Then another element is perhaps it's important that these African governments, including Malawi here, that they put together some structured markets. And these structured markets would allow them be able to have data of what is available commodity or available output or supply that would be able either to meet the domestic market. And out of that, do we have a surplus that we could be able to push out for the international markets or for the regional market? And I would be a little bit wrong not to suggest an element of perhaps it's high time that our African states moved the restrictions beyond maize. So most of the restrictions that are happening, they are based on the fear that we may not be able to have enough staples. And because of that, they tend to offer a very bracket, let me say so, a kind of a restriction that applies to each and every agricultural value chain, to the extent affecting a chain that is not even concerned in ensuring our food security. So in summary, and also for the sake of time, I would summarize that first, we need a rule-based framework that would make these restrictions predictable. Second, government must make sure that they align to the commitments that are set either at SADC, at COMESA, as well as the wider African free available area, because otherwise there would be repercussions that would come when the other states retaliate to the interventions or to restrictions that they are putting in place. Third, it's important that governments engage the local private sectors that are investors, that are traders in the agricultural space, so that they are able to hear their concerns and they are also part of the decision of restricting agricultural trade to the international market. Then fourth, it is still important that we must have a structured markets. These structured markets will be able to allow us compile or collect data that would inform the decisions that these governments are making. Then at the very end, I was talking about we need to balance our agriculture policy, especially in terms of trade restrictions, to move beyond this type. Because it's not all the time that the restrictions have to apply to other cash crops or to other crops such as oil seeds. But because government issues these policies as a blanket, traders, they really never know. which value chains is under restrictions or not, because our interest is basically on maize or on a staple food. Chair, I would stop there for another panelist to continue with the other questions. Thank you very much.
Dr. Kirimi, are you there?
Seems she has frozen.
I suppose Dr. Kirimi might be experiencing challenges maybe with connectivity. No, thank you so much.
You can't hear me?
Oh, now we can get you. Thank you so much. We can hear
sorry.
you. Thank you.
Sorry about that. So I was posing a question to Janet, and I was asking, from a regional cooperation and foreign relations perspective, how can countries work together more effectively to reduce agricultural trade disruptions and improve market access? Over to you, Janet.
Thank you so much, Dr. Lillian, and good afternoon, panelists and all participants. And thank you very much for this opportunity to be able to contribute in this very useful webinar. So on my side, I'll talk about what is happening in Tanzania when it comes to restrictions on agricultural trade. And recently, we have been experiencing an increased use of these restrictions in agricultural trade. And one of the main reasons is because of ensuring food security in the country. So as much as how food security is very important to our country, but the blanket usage of these restrictions have been made us experiencing a lot of problems, especially on agricultural trade and the value chain in agricultural sectors. So apart from this restriction, also we've been seeing periodic export bans, which are happening, but also the requirement of export permits, especially for some of the crops, whereby traders and farmers, most of the time, they're not sure if they are going to get the permits to be able to export their crops outside the country. If you leave that aside, we have problems with over-regulations, especially on the agricultural trade. And these regulators, they have overlapping mandates, which gives burdensome to farmers and traders in our countries. So when we put all these together, we see that it has brought a lot of problem in agricultural sector and agricultural trade overall in Tanzania. And when we look at the statistics, it shows that with these restrictions which are imposed, when these restrictions are imposed, they bring up a price reduction to farmers between a range of 10 to 30%. So this is very big, and it's bring up problems when it comes to agricultural financing, which first of all, it's facing a lot of problems in Tanzania, but also private investment in agricultural sectors, because now investors are hesitating because of unpredictability of trade around the agricultural sectors. So when we talk about regional regulations, first we have to know that diplomats have a big role. And one of the things which has been happening on solving these issues when they happens is by using diplomatic means. But what we're experiencing, we've been seeing that diplomatic representatives from countries meet when there is this bans has been already imposed, and countries have been experiencing problems from these bans. So diplomats meet for consultation and see how we can solve these bans which has been imposed. But there could be a better way of using diplomatic channels in addressing these issues
because the problem of food security cannot happen in a silos. When countries want to establish policies to ensure that there's a food security in the country, because of the trade in agriculture, it means that we need to cooperate on how we can see that there is a food security in the whole region at all. Because if there is a food security in one country, let's say in Tanzania, but there's no food in Kenya, the price transmissions will just happen in Tanzania, whether there is interventions or government interventions in terms of the export bans or anything, but still also Tanzania will experience that problem. So there is a very important aspect that we need to work on. That's we need to use our diplomatic channels that are existing to solve these, to take into consideration that food security is a regional, need regional policies rather than individual countries' policies when we want to address this problem. And therefore, with that, we'll be able to see that there is a cooperation which there is no restrictions on agricultural trade, but also there is a food security across the region. So regional cooperation, there was a report by UNCTAD, which has been released by UNCTAD like 1 month ago. It's called Invisible Barrier, the Cost of NTB Measures. And it shows that when there is a regional cooperations, especially when you're addressing these trade measures and trade restrictions, then it solves the costs. When we are working on, when we are having regulatory cooperations at the region, it will reduce the cost around 15 to 30%. And this report emphasized that this will be even more to Africa, that even when we're having a very limited cooperation, regional cooperations, to reduce these restrictions and to reduce these non-tariff measures, then it could reduce the costs in trade around 30 to 40%, which is a lot. So it's important having regional cooperations, using our diplomatic channels to solve these problems in a cooperative way rather than taking it as in a country individuals, because it will implicate impact to other countries as well. But also it becomes a burden to farmers in the domestic market. But another thing that we have to put in consideration is early notifications and transparency when imposing these bans. And we will only be able to, countries will be able to put these early notifications and bans when we have evidence-based sources, early warning signs that we are using, structured consultations on what is happening in terms of climate shocks, which might affect food security and therefore force the countries to impose some measures like trade restrictions on the agriculture sector to ensure that there is availability of food. Therefore, if there is early notifications, if we have systematic review of these early signs, then it will reduce this, when we notify, it will reduce this cost by 19%, or equivalent to 28% of the tariffs. So we see that this is a lot, because farmers, when they are getting this information earlier, it means it will help them to make this informed decisions when knowing that they cannot access a certain market. So they will have enough time to see where will they get the market for their products and where they could channel their market, their product. But if they get these abrupt restrictions, then it becomes a lot of interference in agricultural trade. So
thank you, Janet. If I could, please, if you could summarize, then we can move on to the next panelist.
Thank you so much, Dr. Lillian. So in summarization, we say that it is important that we align these national food security policies across the region rather than implementing it in silos.
And if we align them, it will help us to reduce these abrupt trade restrictions, which are imposed, which have a heavy burdens to farmers. And therefore, we'll be having a reliable cross-border supply chain, which will benefit all of us in the region. Thank you so much. Thank you, Janet. We've had diplomacy is important. But now let's turn to Mr. Luyombe. And your question is still on the regional perspectives here. And the question is, how do recent policy uncertainties and ad hoc trade restrictions influence participation in regional markets such as EAC, COMESA, AfCFTA, particularly in relation to competitiveness and food system resilience?
Doctor, could you
Kelvin,
please pardon me?
Did you hear?
Could you please, no, please pardon?
Yes. Okay, let me repeat the question. Can you hear me, Kelvin?
Yes, doctor, I can.
Okay, the question is this. How do the recent policy uncertainties and ad hoc trade restrictions influence participation in regional markets such as the EAC, COMESA, and AfCFTA, particularly in relation to competitiveness and food system resilience?
Thank you very much, Doctor, for that question. Well, on the point of uncertainty, we find that because of trade restrictions that are imposed by different countries, in the point Uganda and Kenya as an example, producers fail to sell most of their produces in these other countries. So if I'm a farmer, and what we're seeing is if I'm a farmer and I fail to sell this season, I do not have an incentive to plant again for the next season. But also because of the unpredictability in trade policy, most especially as we come to political contestations within our neighboring countries, you find that they impose restrictions. And because most of producers within other countries are uncertain of the demand that is going to be in these, demand in these neighboring countries, you end up seeing that most of the producers are not willing to produce some of these products. But in the broader perspective, within the sub-Saharan context, whenever we are unsure of markets, whenever trade policy is not certain, oftentimes leaders committing and making pronunciations about free trade and a customs union, whereas doing the opposite in light of the nationalism and political economy, the political situation within member countries, it prevents that form of certainty that is required for trade. And a point in case, if Ugandan milk producers have been selling their milk in Kenya, and because of reasons within Kenya blocks milk from entering Uganda, it means that that market is no longer an assured market, and therefore I can, if I'm making a decision to expand my farm, I am not going to be able to do that. But even in the broader, on a more policy and structural point, other hindrances, with the case of Uganda, as we noted the previous sessions we had, the structural challenges that exist make it impossible for producers to have an incentive to sell internationally within the African context. And what do I mean by this? On top of the trade uncertainty, we have more reinforcing challenges. For example, the challenge of security, but also distance and access. So while we might have open borders, the cost of moving these goods, for example, becomes hard. And because of that high cost, it increases the cost of these goods, and therefore they cannot be able to sell it does not make business sense to sell within Africa. And also we need to be honest about the pains that are present from trade, for example, in trying to reconcile this policy uncertainty. We need to be cognizant of the fact that intra-African trade is going to produce both winners and losers. When we had our session here in Uganda, we were faced with a problem, for example, of rice. The Tanzanian rice will always be cheaper. If you allow it to enter Uganda, they will always outcompete the farmers in Uganda. So as we push for more trade certainty, we need to recognize that there are going to be people who are going to suffer from this trade. And therefore, how do we compensate them? How do we ensure that they move to more productive, perhaps, areas that the countries have a comparative advantage over? And therefore, even while we push many of these countries to commit to intra-Africa trade, we need to be cognizant that this trade is going to lead to people, some segments of the same economy suffering. But also we need to answer the question, as I conclude, of the challenges that are hindering this form that are hindering and creating this policy uncertainty. And while some of them might be regulatory, for example, restrictions, alignment of standards, the others are political. And most of these countries are seeing a great rise of nationalism internally. And therefore, as policymakers, we need to confront this very complex issue by being frank about the pros and cons of this trade and how we can work to navigate some of the structure challenges like transport, infrastructure challenges, productivity. Uganda, for example, is supposed to has a trade agreement to sell milk to Algeria, but on top of the reinforcing transport infrastructure challenges, there's a question of whether Uganda can actually produce the production volumes required to meet these quotas by Algeria. And therefore, as I conclude, I would call upon the policymakers and other researchers to pay more and close attention to the hindrances of this trade, and by being interested in the pains that come from trade and how we can work together to redistribute the gains to those that are going to lose eventually from this trade. Thank you very much, Dr.
Thank you very much, Kelvin. I think your common name is Joshua, and we appreciate
a lot of things there, that trade creates losers and winners. So we hopefully you are listening and picking up these very interesting discussions. Our last panelist in this section on reflections on country perspectives is someone from the private sector. So he's going to give us that private sector perspective, Mr. Yotam Kandawire. And your question, Yotam, is what role can structured evidence-informed dialogue between government, researchers, and the private sector play in improving trade policy predictability and implementation? Over to you, Yotam.
All right. Thank you so much, Dr. Klimi. For those that probably may join us a little bit late, my name is Yotam Kandawire. I would like to thank ANAPRI and AGRA to have organized this webinar so that we. So let me go straight into delivering what I had prepared for my questions. Yeah, structured evidence-informed dialogue between government researchers and the private sector can play a quite significant role in improving trade policies predictability and also implementation in the region. Many African countries, if you're aware, is that we do not really lack the policies, but policies are there. But the issue is, the inconsistent implementation of these policies, and also limited coordination and reactive decision making, especially during crisis times. So well-designed, dialogue platforms would reduce, these ad hoc, political-driven restrictions, and also, in a nutshell, it would also improve the quality of policy decisions. It will also increase, predictability and trust among, the players on the market. When government frequent, change policies such as export bans, import bans, subsidies, tariffs, or price controls, traders become the traders become uncertain about their future market conditions. Export bans may cause, domestic grain prices to collapse. That's one thing that probably our policymakers deliberately do not want to hear. But in the region, it reduces interregional trade. Regional grain trade depends on predictable rules and regulations. I think most of these things have been highlighted by the previous speakers, even during the opening remarks. I think I heard Dr. Brian and also Dr. Chapoto to have equally alluded to, the restrictions and what really comes along with them. In the region, it reduces interregional trade. Regional grain trade depends on predictable rules and regulations. Studies have shown, clearly that these vices takes away the incentives for private sector investment. It's difficult for a private sector to invest in an unpredictable environment where they operate in. So involving private sector actors before introducing policy measures is important, because businesses, traders, processors, transporters, even financial institutions are directly affected by these policies. And often these players have the practical market knowledge that government may not have. Involving them is like you're bringing together, different experiences and knowledge to deal with an issue that will help the trade to take place in that country.
So involving stakeholders improve policy effectiveness, it reduces policy uncertainties, it encourages compliance and cooperation, it supports regional market integration and encourages private sector investment. At the same time, you are vetting the risk of excluding private sector in the decision-making process. And timely information on stock levels, demand prices, and trade flows is essential for the effective functioning of the grain market and regional food systems. Accurate and up-to-date market information helps government traders, farmers, and processors and consumers make well and informed decisions. And it reduces uncertainties and improves food security and helps the market to stabilize. All right, and the structured dialogue can improve trust between government and industry players by creating a regular and transparent and predictable communication channels where both sides freely share information, discuss issues and concerns, and in most cases, develop joint solutions between government and also the private sector. In sectors such as agriculture and grain trade, this cooperation is very, very important for stable markets, effective policies, and long-term investment, such builds mutual understanding among stakeholders. Then practical mechanism for regular consultations and policy feedbacks are organized processes that allow government and private sector actors and other stakeholders communicate consistently about policies, market conditions, and implementation of those challenges. These mechanisms help improve transparency, trust, and also policy effectiveness. Notable mechanisms are the PPDs, private-public dialogues. These are very common in most countries. I think we had one in Zambia last week where we're talking about the export of maize. So these are more interactive because you're able to interact with government and also able to get feedback from the private sector. And at the same time, you're able to develop those mutual solutions that benefit both the trader and also private sector and also the government. And the others, I think they're doing a lot of...
Yotam, maybe you could conclude, please.
Yes, just a second, I'm concluding. I think, so the other mechanisms that are being used in the region are mostly stakeholder consultations, technical working groups, commodity associations, and business councils. Regional trade forums, parliamentary and advisory committees. These are some of the mechanisms that most respective governments or countries are using in order to interact with the public and also the private sector. Because of the time, I think I'll end here. Thank you.
Thank you very much, Yotam. I believe, colleagues, participants, you have been listening keenly, and we've had a lot of interesting issues raised and highlights from the different country perspectives. We've heard, for example, that agricultural trade disruptions are driven by both structural constraints and short-term policy responses. We've heard about the importance of domestic food security concerns being legitimate, but unilateral restrictions to deal with such concerns can also create regional spillovers that would make even overall food security a challenge. Policy unpredictability affects all the value chain players, and so that's something we need to pay attention to. We've had also importance of having reliable data, transparent rules, and early consultation, early warnings. And towards the end, we've heard about the importance of structured dialogue between government, researchers, and the private sector. And with that, I'd really like to thank our panelists for their rich country level perspectives. Now we want to move from the country experiences to share a little bit about the regional perspective. And in this second part of the panel, we have only one panelist, a very interesting panel, who is going to focus on the role of regional bodies and trade agencies in responding to the agricultural trade disruptions. So with that, I'd like to welcome Mr. John Chambamasa. Hey, your name, John. Allow me to try again. Chambamakasa. Yes, I think I got it now. Who is going to share with us the regional perspectives, as I have said. For you, John, we'll have two questions. I'll allow you a little more time because you're the only panelist here. And if you can hear me, John, my first question really focused on where you experience is in. So from the ACTESA and COMESA's perspective, what are the most binding agricultural trade disruptions that are currently affecting African markets? We've heard there are many constraints, but from your perspective, what are the most binding agricultural trade disruptions? And a follow-up to that question, which is still question one, to what extent are these trade disruptions that we are seeing now, to what extent are they structural? To what extent are they policy induced? And to what extent are they episodic or driven by shocks, as we have heard from some of the participants? So that one question, two questions in one. Over to you, John.
Thank you so much. I hope I'm audible and you can hear me all.
Yes, John.
Yeah, so my name is John Chambamakasa. So it's kind of difficult because I'm Pan-African and I'm coming from the regional economic community representing 21 member states of COMESA. Thank you so much. You going to your questions, you've said that what are the most binding agriculture trade disruptions currently affecting African market? And then it went further to say to what extent are they coming from, are they policy induced? Are they structural or are they because of shocks? Indeed, from what we had last year when we had the COMESA Head of State Summit in Nairobi, Kenya, it was, we found out that the COMESA inter-regional trade between COMESA member states sits at 14% compared to COMESA member state trading with others, which is at 35%. So this has been a worrisome it's a worrisome thing to note that amongst ourselves, the member states, we are not trading more volume compared to other, let's say, European market or Middle East within the member states ourselves. So one of the binding disruption to agriculture trade has been lack of harmonized standards and policy on inputs and output markets. I think most of my colleagues here that have spoken, the panelists here, have alluded to that fact. Within COMESA, as a regional grouping of member states, our activities or our nature of work is anchored in the policy framework, where we have regional standards in place that member states have supposed to align their laws to that of COMESA regulations, as per the COMESA treaty, which they signed, which member states are signatory to. So far, relating to agriculture trade, relating this to, I'll start with this policy-induced disruptions. In COMESA, we have a number of policies, instruments that I've alluded to related to agriculture trade. One of them includes the COMESA Green Pass. This is the SPS scheme or tool which they use to trade amongst the member states ourselves. So far, as we are trading with agriculture commodities, there's an issue to do with phytosanitary and phytosanitary standards. So COMESA came up with these regulations or policies that which we need to follow. But so far, only 3 countries are using the Green Pass. So the Green Pass is used by small-scale traders, and it was got a ceiling volume of $2,000, which, between member states of COMESA, at the border in Busia there, as we are crossing the borders, there are a lot of people that are crossing. Kasumbalesa, Zambia, there are also a lot of people that are crossing, small-scale traders. So COMESA looked at that and introduced the Green Pass. So the 3 countries that are there is Malawi, Zambia, and DRC at the moment. But we're still struggling with other member states so that they should adopt this. And also we have got the simplified trade regime, which we have, and in this, we've got only about 7 countries that have fully onboarded on the simplified trade regime. And on another tool that we have is also to do with the COMESA seed harmonization plan. So we have this policy work. It was launched in 2014. So we have been, it has been launched so far in 19 member states, and among us, the 21 member. We didn't launch it in Libya and Somalia because of the issues out there. But so far, we've launched the COMESA seed regulation and procedures in the 19 COMESA member states. But even if we launched there, it has been slow for them to harmonize their seed laws so that they should align to that of COMESA. Amongst these 19, 11 so far have harmonized their seed regulations. So on these regulations, there are 2 things that are agreed into this. That once, am I not audible enough, or is it you?
We can hear you, John.
Yeah, I've just seen a comment. Somebody says that I'm not audible. Okay, thank you so much. So on the COMSIS, amongst the 19 that we launched, only 11 countries have signed up their seed laws and policies aligned to that of COMESA. So if you see on policy issues, still member states are still holding on to their sovereignty, wanting on to do these protectionism measures and all that. But it's been a long process, and we are going towards there. We are at 11 now on the seed. And then on the SPSS issues, the Green Pass, as we have said, we started with 3, but now we are moving. I'm so sure now Zimbabwe, we're engaging Zimbabwe, should be on board, and Uganda and Kenya. So what I would say the most on policy issues is lack of harmonized standard and misalignment between the SPS laws in member states for them to align to that of COMESA. This can also be the fact that member states are not at the same level in terms of technology, in terms of infrastructure, in terms of processes. You look at Egypt, Tunisia, and then you go to Burundi, Malawi, Madagascar, Comoros are not at the same level in terms of processes, in terms of technology, in terms of technical know-how, I would put it that way. So we have that challenge. Yes, we have also the COMESA biosafety and biotechnology policy in place, but it hasn't been launched so far. And as you know, we are grappling with funding from member states, but we are still engaging with other partners so that we can launch these policies. So far, we have planned to have the COMESA biotechnology and biosafety panel of experts to come into Lusaka to launch this, so that we should have this umbrella thing. And then on that's on the input side. On the output market so far, we have the usual, the ad hoc bans. of import bans and export bans. We saw in between 2024 and 2025, Malawi, Uganda, Kenya implementing this retaliatory by the other neighboring countries so far. So these are also out there, although we have the policies in place, but still member states could also ban. Have talked about that there is lack of trust in terms of processes and procedures. Although we already have the umbrella procedures agreed, but the member states still feel that they could also administer these ad hoc bans. We look also at tariff and non-tariff barriers. The stringent SPSS measures so far that I've talked to are also affecting also some of the restrictions affecting agricultural trade within our member states. And we also look at high cost of border, which are structural, high cost of the high cost of border at the time lag spent at the borders by the traders so far. A lot of traders spend time. There was a case study between the border between Kenya and Burundi, whereby a truck would spend 3 days rather, 3 days, 2 days without it being cleared. So this affects the agriculture products which are most perishable and they need to be delivered on time. So far, we are simplifying this within the COMESA member states. We are looking at certificates. To counter this, we've introduced what we call e-certification. E-certification is also something that automates the processes so that we should beat out the time lags at the border. And also, we have what Dr. Pangapanga had also mentioned to say uncoordinated or fragmented market within our member states. So there's lack of information between the producer and the end of the market itself. Member states or the farmers, the producer and the seller don't really know what is happening out there between the demand side and the supply side. So there's lack of coordination with the market itself. So I think on question 1, I've ramped it up already together. Is it okay?
Yes, it's very well done, John. Thank you very much. And I won't let you go before you answer another question. I'm sure that's of big interest to the participants. But this one, I'd ask that you shorten your response. The question is, how far can digital trade facilitation tools help reduce these disruptions that you have mentioned?
Thank you so much, Lillian. I had already started touching on that one.
Yes.
The digital tool, as COMESA, we have a number of digital tools in place. However, these digital tools came about so that to reduce inefficiencies at the borders. Inefficiencies at the borders which experience due to longer time frame, seamless processes, automation of the processes at the border when we are crossing agricultural commodities from one country to another. So we have a number of tools. One of them is the e-certificate of origin. The e-certificate of origin has been rolled into about 15 member states now that are fully implementing the e-certification of commerce. This shows that the origin of a produce is coming from a COMESA member state. In that case, it's given preferential treatment at the border. So when you could have spent 2 days or 1 day, since your product, you have an e-certification system, it's already with the customs officers and agents, they are able to process your thing at a maximum of 3 hours. Then you are done at the border. This has really reduced that so far. And also we are looking at Dr. Nega from AGRA mentioned that we are doing what we are calling the regional food balance sheet. It's a digital tool, it's a digital app that member states are using to show the data gap in agro-food trade within the member states. So far, the RFBS is in 6 countries of Malawi, Zambia, Uganda, Kenya, Tanzania, which is not non-COMESA, but we co-opted into this, And we are planning to scale it over to more countries within the COMESA. And also we have what we call the COMESA labeling system. It uses the blockchain technology. When the COMESA seed labeling system, when a seed is produced, let's say in a member state, they use this sticker, the labeling system, which is inputted into the system at the border. They will track with a number to say, where is this coming from? And they pass like a passport to the agriculture produce, to the agriculture seed commodities from one member state to another. These have reduced time spent at the border, eliminating days spent there to a few hours, which is necessary for agriculture commodities. So in summary, I would say for these two questions, one is that we need a clear step of harmonizing the standards in place, that all the member states should open up their countries. We don't have a way of enforcing this, but there is a treaty which they are signatory to. We can't force them, but we need to do dialogue. We need to understand for them to really open up their borders to the other countries. And also the use of technology cannot be left. For us, if we are serious, we need to automate our seed. We need not rather seed, we need to automate the agriculture trade processes so that things should move as quick as possible. So in lastly, I'll leave you with this. Africa or COMESA or SADC or ESC and ECOWAS, for us to move forward, the onus is on us opening up our borders to our neighbors. Once we do that, we are being unstoppable. Thank you so much, Lillian.
Thank you so much, John. We could listen to more of that, but allow me to conclude this session by thanking you, John, for those very useful regional perspectives. And as we can see, that discussion has clearly shown that trade disruptions are not only technical or regulatory issues, they are also institutional. You've heard John say member states should open up their borders. So we have issues that are institutional, political, we have coordination challenges, and much more that John and the other panelists have spoken to. With that, I'd like now to hand back to the facilitator, Dr. Mlenga. Over to you. Thank you.
Yeah, thank you so much, Dr. Kirimi. Thanks to all the panelists for those very insightful for the very insightful interventions and inputs that they've provided. And clearly, I think we see a lot of linkages between the presentations and what our panelists have also articulated. In the interest of time, I mean, something that I don't like to do, to curtail the discussion, but we are very cognizant that people have got other programs. So maybe what we can do at this point, I thought maybe we can just give it 2-3 minutes if there's any burning questions. Just 2-3 minutes. I think I will just allow 2 questions at the most, so that before we wrap up, at least we hear from the participants if there's any burning issues that they would want our panelists or other participants to respond to. Thank you. So don't need to raise your hand, just jump right in and ask your question. Please make it brief. We only have 2 to 3 minutes.
Brian, there is a question for Abba from Oluwabenga. I think he's asking Abba to respond. Yes, in the chat. He's asking Abba to respond to the challenges regarding tomato trade between Ghana and Burkina Faso, and what lessons can be drawn from the evolving situation.
Yeah. So can I address
Maybe we can get Esther to respond to that. Thanks.
Yes.
Quickly,
yes.
Esther, as concise as you can. Thank you.
Sure. Thank you very much. So the evolving trade, tomato trade, right, it offers a clear window into both the opportunities and vulnerabilities when it comes to regional agricultural trade or integration in West Africa. So let me just give a brief of context so that people who are not within this side will understand. Ghana remains highly dependent on imports, right? That's tomatoes from Burkina Faso to bridge our domestic gap of almost 300,000 metric tons, and that is annually. And then in practice, it means that during the lean seasons, Ghanaian markets rely heavily on cross-border inflows to stabilize prices and supply. And then when the corridor is disrupted, either due to policy or security shocks, for which we had experience some time ago, the impact is immediate. One, we experience shortages on the market and then sharp price spikes across the urban markets in Ghana. However, on the side of Burkina Faso, the trade is increasingly shaped by industrial policy shifts toward domestic processing, and the recent suspension of this fresh tomato export, specifically to Ghana, was designed to prioritize local agro-processing factories and reduce raw export dependence. And this policy shift effectively reoriented the trade flows inward, but it also exposed how fragile the regional supply chains can be when export decisions are made unilaterally. So it's pivot back to one of the recommendations by one of the panelists that there should be some form of agreement when it comes to trading between countries for effective AfCFTA implementation. And then also one other major challenge is the infrastructure and export and post-harvest inefficiency on the Ghanaian side, right? Most traders in Ghana prefer the Burkinabe tomatoes because they are firmer, more uniform, and better suited for transport over long distances. In contrast to our locally produced tomatoes, which deteriorate quickly due to high water content, handling losses, and weak cold chain systems, making them less competitive on the regional market. And then also, Burkina Faso have had their own issues of security risk, becoming a defining factor or feature along the corridor. And I think Burkina is not just alone. There are also other countries facing such challenges. And for Ghana specifically, there were attacks on some Ghanaian traders in Burkina Faso trying to get tomatoes to Ghana, which really disrupted the trade flows and forced temporary suspensions of cross-border movement. And this also highlights how non-economic factors increasingly shape food trade reliability in the Sahel coastal interface. And the key lesson for this situation is that regional trade cannot rely on informal or episodic flows alone. One, it requires harmonized trade and export policies to prevent sudden unilateral bans, investment in agro-processing on both sides, so value is retained locally while stabilizing regional supply. Also, in terms of logistics, of course, for my country, Ghana, we should look at it and ensure it is upgraded, and then the post-harvest systems are also working well so that domestic produce...
I'm sorry to cut you short, Esther, but if you could just conclude now.
Okay, so I would like to conclude that this issue between Ghana and Burkina Faso is not just an isolation or an isolated case. It may happen because it is we are having increasing security risk within the region. So some of these things needs to be done right, coming together to have a form of agreement so that the informal trades are structured and works well for both countries. So that in the end, the AfCFTA, plan of making sure that there's increasing regional trade works well for all countries involved. Pretty much that's what I've got to say. Yeah, thank you.
Thank you so much, Esther. Very much appreciated. There's two hands. I think I'll allow, these are the last ones. We've got Wisdom, Adongo, and then we have Dennis. So Wisdom, you have 30 seconds to ask your question, and please be as concise, and if you can also be specific to who it is targeted at. Thanks. Wisdom, if you're speaking, you are on mute. Maybe we can go to Dennis. Dennis, you can go ahead with your intervention. Okay, seems
Please
okay.
unmute
Yes, Dennis,
yourself.
go ahead.
Do you hear me, sir?
Yes, we can hear you, sir. Please, you have 30 seconds.
Okay. The key point is, with all these changes, with all these banning and restrictions, where lies the continental free trade arena? Because if everybody is going to protect their interests pertaining to each country, then what happens to the continental free trade? We wouldn't be able to prosecute that. So we have to let the governments understand that for trading, for the private sector, trading is the key. And trading is a commodity sharing of the relevance of protocols across borders. Not government prefer this or prefer that, and at this time of the year or the latter part of the year, but allow free flow of trading across borders. Thank you.
All right, thank you. Thank you so much. I think that was wisdom. Now we can go to Dennis.
Yes, thank you, Brian. And I had started with thanking ANAPRI for organizing the webinar, and my question goes to Riombia. He talked about pains of trade with regard to integration. What was he trying to mean? Can he throw more light on what these pains of trade are? Thank you.
All right, thank you so much, I guess, and thanks for being very specific. So, Joshua, I think that question was for you from Dennis. If you can just give it.
Thank you very much,
as well,
Dennis, for that question.
Mm.
I don't know if can I be heard?
Yes.
Yes, we can hear you.
From the pains of trade, oftentimes when economists talk about free trade, we confront it with painting a glossy picture of the gains that come from this trade. But we must be cognizant of the fact that, yes, this trade is going to produce some losers. And therefore, we need to have honest discussions. If you look at Uganda and you say Uganda has its rice growers, but then Tanzania's rice growers have either comparative advantage to produce rice cheaply. So if we are to import the rice from Tanzania as Uganda, how are we going to compensate these other rice growers in Uganda? How do we make them move away from maybe growing rice to another crop that they can be able to trade? So we need to understand that in the trade negotiation and bringing countries to be able to commit to this regional integration and free trade, it must come from the acknowledgement of trade having both winners and losers, and that it is not only about the gains from trade, but their pains, and how do we compensate those who lose? How do we redistribute this welfare? Yes, Dennis.
Thank you so much, Kelvin. And I think Wisdom's intervention was also very important. I think I think it borders on the issue of commitments. I think government should not only implement policies when they suit their particular countries, but I think the recognition that if we are to build or strengthen our regional integration, then we have to be consistent and commit, to the treaties that we have all signed to. I think that's a very important issue, because if we are struggling with, these treaties that we have, what more when we talk of the continental world? So thanks so much, everyone. I think as we wrap up, allow me to invite Dr. Njagi again, who can give us a quick wrap-up, Tim, in 2 minutes. If you can give us just a quick punchy summaries, and then we'll wrap it up. Thank you. Over to you, Tim.
Thank you. Thank you so much, Brian. So here are the quick takeaways from the discussions. I think first is that we are recognizing that trade disruptions are systemic, and I think they are actually going, as Mr. Wilson said, across both continental and regional trade agreements. Most of the time, as from the examples we've seen, they are being imposed based on short-term policy responses to some domestic issues. However, we have quite a lot that we can do, especially from both the regional and continental level, mainly to build trust and ensure that we can implement the processes and procedures that we've all agreed to. So the first one is that, yeah, we need more transparency, especially in resolving non-trade barriers and technical barriers to trade. We need to be more transparent on how restrictions are resolved. And there's need for more dialogue and discussion to minimize the effect these discussions have on the regional food system. So one of the ways, we know that data can be there, but sometimes data is not making its way to the decision-making table. But we think that some of the rapid analytics, structured dialogues can help make better decisions. The key thing to attract investments and build resilience of our food system is to ensure that trade predictability is there. And this will be central towards food system transformation. So lastly, the point that I think I picked is that we need to strengthen regional coordination. I think from John, he mentioned several mechanisms that are already existing, but there is low adoption. So these coordination mechanisms need to be strengthened to ensure that people are signing on to them. Then there's compliance monitoring and dispute resolution mechanisms to ensure that all of us are looking at this, again, just from the point that Kelvin finished on, that we are not looking to advantage some groups and disadvantage other groups, but then there's transparency in how this affects different actors within the agri-food systems. Thank you.
Thank you so much, Tim, for that well summarized takeaway, well summarized takeaway messages. And indeed, as I said earlier on, I think we can all see, the congruences across the different contributors. I think the issues, we seem to have a very common thread running, through all the countries and the region as a whole. So as we come to the end, I think allow me, on behalf of the organizers, ANAPRI, AGRA, and other key organizers who have helped to put this synthesis regional webinar together. Let me also thank the speakers, the opening speakers, our keynote presenter, our moderator, and all the participants for taking time off your busy schedule on the middle of the week. I know how hectic it can be. So we really thank and value your participation in this meeting and for your contribution. I think today's conversation has highlighted the need for more predictability in policy, transparency in regulations, evidence-backed agricultural trade policies. I think the issue of data system, came in very prominent, and it was a recurring theme. It has also highlighted the importance, of strengthening regional coordination, improving the use of data, and also the need to deepen structured dialogue among government, regional bodies, researchers, and private sector. And especially on private sector, I think this came up very, very, very strongly, because private sector, in most cases, they are the ones in the market. They are the ones feeling the heat. They are the ones who are the front line when it comes to trade. So with those few remarks, we look forward, to continuing this engagement. This is not the end. I think we all know how we can still communicate and engage bilaterally, and also through the ANAPRI platform, through emails. So the engagement will continue. And through this, I know that there's going to be a regional synthesis brief that is going to be developed, and I'm sure that this will be shared widely, and also to find itself in the right offices and on the right desks, so that some of these recommendations that have been generated from this session can begin to gain traction and begin to be implemented. With those few remarks, I wish to thank each and every one of you for joining us today. And I'm wishing all of you a wonderful morning, a wonderful afternoon, or wonderful evening, depending on where you are. Thank you so much, and looking forward to our continued engagement in the different platforms. Thank you, everybody. Bye.
Thank you. Bye.
Bye-bye.
Thank you.
Bye-bye.
Bye.